Hey everyone, welcome to Dr. Frank's Finance World. I'm Dr. Frank, the bank, because I teach you something about finance and try to help you make some money. This is Technical Analysis Part 2. So be sure to subscribe or get notifications if you'd like to know more. Look in the notes for links, that's always true, but I like to remind people of that for our websites and so forth. And then check out the books in our bookstore. We got some pretty good ones this time for sure. So technical analysis, as we discussed a little bit last time, has a plethora of indicators, many different ones. I consider most of them to be voodoo science, I guess basically worthless, because I don't think they give a pattern that is recognizable and repeatable, and because of that, I think they are too subjective. So I do look at ones that are number based, but anyway, the books that you read, by the way, when you go out there and look, keep this in mind. Even the ones I suggest, sometimes they get pretty far off the deep end. If you stick to kind of the basics and relate it to some of the stuff we do here, or maybe find something interesting, send in an email and we can try to answer it. But anyway, they are worth reading, but remember they get pretty far out there sometimes, further than I would even John Bollinger's book. So most are easily trackable with various websites. Most of the technical methods you could use. As a matter of fact, graphing websites are the best in the sense that you get a visual picture of what's going on. But you'll see more of this in a second. I'll tempt you with one here at the end a little bit. But anyway, you can and typically will include biases. Many of the different ones will. You have to be careful about that, looking at certain periods of time or saying, hey, I think this is a good company and therefore I'm going to kind of see it my way. I know that's why I stick to very specific rules. You'll see when I get into Bollinger Bands exactly how and why I do that. It is possible, and we'll look at the research this time, to do something called data mining, which is to only look at the companies you want, or only the size firms that you want, or only the time period that you want, and try to find something that makes pattern sense to you, I guess. But basically, you have to be careful about whether what we're finding is repeatable or not. If it's not, then essentially it is data mining. And it is true that some stocks or markets are better behaved than others. They basically work and do what you expect them to do. Not perfectly all the time, but often enough that it makes it worth it to think about it as a method for inclusion in your analysis after you do fundamental analysis. The reason why these are worlds out here, there's a world about technical analysis, and we'll go over a bunch of different ones, and some of them will have multiple parts. There's going to be a world about fundamental analysis, a world about forming portfolios, and so forth. So just one of many. We could be long-term friends on a lot of this kind of stuff. Okay, so like I said, I'm always focused on the math pretty much, and these are the ones that we will be going over in this world of technical analysis. Bollinger Bands are pretty cool. I'll show you some neat stuff on that and about how they originate and why there could be some truth to what goes on there. Another one that last time we talked about layering, and I've tried a bunch of different ones, but I typically do layer relative strength with Bollinger Bands. Also sort of numbers based, but more about momentum. Fibonacci is kind of fun. It's a neat one I threw in there. I do believe that science and social sciences kind of merge sometimes. And if you go way back many years ago, there's an Italian guy named Fibonacci who saw a sequence in nature, and it's sort of repeated to sometimes in finance. I think the reason why is because people think that it's going to happen. So it's a little bit of a self-fulfilling prophecy, but it is at least something that I keep an eye on as I go through this process of evaluation. Candlesticks and MACD. I like candlesticks, they're interesting. And I understand MACD, but I'm going to have a specialist come on, a friend of mine who's worked in this area for many years, and he's going to describe more of how he goes about that. Interestingly, he works in the same office as I do at JBA, and he when we compare the Bollinger Bands and relative strength to candlesticks and MACD and find a lot of overlap actually. So there's also another one called support and resistance levels. We'll look at those. If I'm looking to where something might fall to or rise to, I look at where it has fallen to and risen to in recent history. There's a reason from valuation standpoint why you might expect that to happen. it's achieving a certain price to earnings multiple or whatever again and again. But anyway, there's a reason why those might work, and that's why we're going to go over it. So what does research say? Last time we went over some research that was kind of negative about technical analysis. I pulled these up this time so you could see what some other analysis says and why I think, picking through the research to try to find the parts that might work for you actually works. So if we go over to there, we can see that the first one is the use of technical analysis in the foreign exchange market. Technical or chartist analysis of markets involves providing forecast or trading advice on the basis of largely visually inspecting past prices. This paper reports the results of a questionnaire. I've always said that the big boys kind of take a look at this too, and this is what the questionnaire shows. Among chief foreign exchange dealers based in London, at least as of 35-40 years ago, amongst other findings, it revealed that at least 90% of respondents place some weight on this form of non-fundamental analysis when forming views at one or more time horizons. And that's true. When we look at Bollinger Bands, we'll talk about you could do it short term or kind of a medium term and so forth. So there is also a skew towards reliance on technical as opposed to fundamental analysis at shorter horizons. They only report the numbers so often, so they rely a little more in between on some of this. A very high proportion of chief dealers view technical and fundamental analysis as complementary forms of analysis, and a substantial proportion suggests that technical analysis advice may be self-fulfilling. But who cares if you're riding the tails of it, making some money? Anyway, so that was one of the papers. The other one was the profitability of technical analysis. Paper still that's about 15-20 years old, but the purpose of the report is to review the evidence on profitability. It's divided in two groups: early or modern studies, according to their testing. Early studies indicate that technical trading strategies were profitable in foreign exchange markets and futures markets, but not in stock markets before the 1980s. Think computers. Modern studies indicate that technical trading strategies consistently generated economic profits in a variety of speculative markets, at least until the early 1990s. Of the 92, 58 found positive results regarding technical trading strategies, while 24 obtained negative results and 10 were mixed. So despite the evidence, it appears that most empirical studies are subject to various problems in the testing process or procedures we talked about, including data snooping, which is only certain periods, only certain times, and so forth. The ex post selection of trading rules, which means looking at it after the fact and sort of snooping through there and see what would have worked, which we don't want to do because it won't repeat itself. And then difficulties in estimation of risk and transaction costs. So anyway, some interesting research out there. And then I'm going to throw you a little bone here, just so it's kind of fun because it's coming very soon. I want to show you what Bollinger Bands look like. This is what we're going to be dealing with next, where the stocks travel within channels and you have a moving average, and there's a couple of standard deviations on either side of this moving average and so forth. But if that RSI lining up with the Bollinger Band at the top says sell and at the bottom says buy, and we average a couple of times down, over this period of time, owning the stock would have lost you about 15 or 20% of your money, while technical analysis would have made some. So anyway, kind of cool stuff. Back to the PowerPoint. Final answer is, it kind of depends on how you use it, to be honest. I'm going to finish a paper. I've already know what the results are, but I want to get it out there for you and get it all nice and pretty. That combines two different math-based technical analysis techniques, and it does show promise on even very highly traded companies, very public, very successful companies that indeed Bollinger Bands and RSI can help you do better. But we will never escape that some markets and some stocks don't work. So, related books, excellent book, Bollinger on Bollinger Bands is what's coming up next. So you might want to pick that up. Technical Analysis Explained by Martin Pring. And remember, there are links to these down here in the notes where you can just click and buy it on Amazon. And then Technical Analysis of Financial Markets by John Murphy, kind of a big long-term guy in the field of finance out there. All right, so for strategies and tips, trade a paper account first. I will also show you how to get to some of these. Some cost you money, some are free, but basically try this without using real money. It's a great way to learn, as long as you're kind of honest with yourself about how you buy and sell and stuff. and see if these different methods work for you. Find a charting program that works for you. That's something big we're going to talk about inside of the Bollinger Band stuff, because there is many different charts and methods and research you can go to out there, or different sites at least for sure. And then try to stick to statistically based. I think it helps you form a more disciplined approach to how you're going to invest out there. So don't forget to like this video. There's my email address if you have questions or suggestions or comments. drfranksfinanceworld@gmail.com. And Bollinger Bands is a 4 or 5 part series, and that's next. So thanks for listening. Have a great day. We'll see you. Bye-bye.